Hi all, it's your guy here, the unknown, and today I want us to look at the explosive index trading strategy, which is the recent strategy that I've added to the channel, and I'm busy adding it to the playbook right now. And I'm gonna send you an updated playbook. If you have the first playbook, I'm gonna send you an updated playbook with the strategy. I'm adding it to the playbook. Okay, so guys, this is explosive, as I said, and one thing I love about this is the fact that it's explosive. What does that mean? That simply means when you enter, you are most likely not going to see a pullback into your entry. They're going to explode straight to your take profit. And again, it means that your take profit is going to be hit quick. Mostly it's going to be hit in 2 minutes, it's going to be hit in 5 minutes, it's gonna be hit in 6 minutes, or sometimes it can actually go to 15 minutes. Okay, but mostly it's gonna be hit in less than 15 minutes. Okay, so that is explosive. So there are a couple of things you must actually look for. Okay, so the first thing is you must identify trap volume. Step one. Okay, you must identify trap volume before the session. Okay, before the session, that is during the Asian session, during the London session. Where have they trapped volume? Okay, this is before the session. This is step one. Identify trapped volume before the session. Trapped volume before the session. Okay, then you must wait for the equity opening time, okay, which is 9:30 US time. Okay, that's the second step. Okay, step two, wait for the equity time, okay, which is 9:30 US time and 4:30 South African time. And then step three is actually uh identifying or waiting for trap volume during the session. So you must be able to find trap volume during, now is during the session. Okay, this is important, guys. And then you need to find step four, you need to find an engulfing candle that shifts the zone from trap volume. Okay, it's not just an engulfing candle, but it must shift the zone from trapped volume. Okay, so what I mean by this is the fact that, okay, when the engulfing candle closes, those who fell for the trap must be at a drawdown, and they must be hoping for prices to come back so that they can exit at break even. Okay, so you must be able to feel the pain of those who are trapped when this engulf candle closes. Okay, so if you can see that, okay, now everybody who is trapped is now in pain, and they are hoping and praying to God to bring prices back to break even so that they can exit at break even, then you are entering at the right place. Remember, 90 to 95% of people are actually losing. Okay, so you must be super patient, and you must be able to feel the pain of those 95%. And when they are trapped and praying and hoping, that's when you get in. Okay, and then again, we target 50 pips. That's step five. Okay, we target 50 pips because they are gonna hit quick. Okay, if you enter multiple times, you can maybe take your profit on the first trade, and then you can allow the other one to run, but mostly they're gonna go 50 pips. Okay, so we want to get paid, and as I said, they're gonna hit your take profit in mostly less than 10 minutes. However, they will sometimes take 15 minutes before hitting your take profit. If they go beyond 30 minutes, just close that trade. Okay, because these are explosive moves. Okay, so as I already said, one thing I love about the strategy, or one thing that makes me believe that most people are getting it right and killing the strategy, is the fact that you don't know what's happening on the day you're coming to trade. Okay, each and every day before the equity opens, you don't know what's going to happen. You don't know if you're going to buy, you don't know if it's you're going to sell. Okay, and for me personally, I don't care if it's a pullback or it's if I'm taking a trade in line with the trend. My 50 pips will be hit. Why? Because these are explosive trades. Okay, so guys, with the day, okay, I'll talk about that later. Right now, let's just focus on this. Okay, as I said, step one is to do what? Is to identify trap volume before the session. And just to say, this works for US 500. Okay, which is S&P. It works for US 30, which is the down, and it works for Nasdaq. Okay, okay. So guys, as you can see, the first step is to identify trap volume before the session begins. So most of the time they're gonna trap volume at the closing price of the previous day, or at the high of the previous day, or at the low of the previous day. So it's gonna be mostly on this level, so it shouldn't be confusing. As you see, I just draw a rectangle whenever I see trap volume. Okay, And then the next step 2, I said, is what is to wait for the equity opening time. As you can see, I'm using a session indicator, but I've eliminated the first hour, and now this session has been expanded to roughly 4 hours, because I know that sometimes they're going to move the markets late. These are indices, and it's a common practice these days. They are moving indices late when everybody has knocked off, when everybody has moved away from their charts. Okay, so this is 4 hours. I've just added another hour, but I've eliminated the first hour, so I'm not gonna trade before the equity opens, 9:30 US time, 4:30 South African time. I really don't care about the moves that happen before the equity opening time. Why? Because for me, it's about the process. I want something that I can repeat each and every day. And as I always say, the markets are not perfect. You need strict rules. You need a process, okay? Because if you are going to be chasing moves, obviously one thing that will make you a better trader is journaling. And you can journal or account for things that, like, you were just chasing. For me, I can account for anything. If I take a loss, I can journal it and I can account for it. Why? Because I waited for my criteria to be met. So trap volume, yes, you tick. Okay, let me just tick. Okay, you tick. Do we have trap volume before the session? Yes, we tick. Okay, did we wait for the equity to open? Yes, we tick. So when the equity opens, I'll go to a smaller time frame. Okay, for me, I love the 1 minute time frame. Okay, why? Because this one makes it more easy for me, and I understand the 1 minute time frame. Okay, so if you don't understand the 1 minute time frame, you can wait for the 5 minute time frame. But on a 5 minute time frame, you are not gonna get these trades every day. Okay, you are, maybe in a week you might get them 3 times. Why? Because as I say, it is 50 pips, and already these are explosive trades, and chances are by the time the 5 minute candle closes, it has already gone 50 pips. But you are gonna get them if the setup is there and they give you the evidence that we have talked about after trapping. You're gonna get a very good setup that is actually gonna explode as well. Okay, so it's the process. If you're gonna be focusing on the 5 minute time frame, it will happen. Remember, charts are fractal. Okay, so if you are focusing on the 5 minutes for your entry, follow your process and wait for the setups to show up. Okay, you are a hunter. Remember, as a hunter, you might not get your prey every day, but make sure when you get it, you capitalize. Okay, so as I said, we have identified trap volume. Now we have waited for the equity opening time, and chances are I'm not gonna actually chase the first candle. Why? Because the first candle is mostly gonna be the most aggressive candle, so I wanted to trade. Okay, as you can see, prices have broken up. Okay, prices have broken up, and what do? They now start trapping down. You see, they are sending traders down, and as I said, it's not about any engulf. Okay, step 3, you must identify trap volumes. That simply means you must be waiting. You must actually be willing to wait once the session begins, to wait for them to trap. So don't rush. Sit on your hands, build lipshoes. If most traders can sit on their hands most of the time, they will make a lot. Okay, so sit on your hands. The equity has opened. You must now follow step 3. What is step 3? I've just explained step 3. Step 3 is actually trap volume during the session. Okay, so this is not one candle. That's one thing you have to understand. Okay, so this might take a number of candles to complete. One thing, you don't know how they're gonna trap. You don't know if they're gonna give you a triangle. You don't know if they're gonna give you a rectangle. You don't know if they're gonna give you a head and shoulder. You just don't know what's gonna happen. And that's the beauty of this strategy. You don't know what's gonna happen. So if you don't know, you have to sit on your hands. Okay, sit on your hands. Okay, so as you can see, the equity opens. Now they send traders down. We're not gonna chase this move. Why? Because there is no trapped volume. Okay, they pull people down, they pull them up. We are not chasing this move. Why? Because simply sending people down is not trapping. Okay, it's not trapping. Okay, so we want to see them trapping. Now they send people down again, and they give you an engulf. You see, a pin engulf. I told you, it's not any engulf we are looking for. It's an engulf that shifts the zone from trap traders, and those who are trapped must be praying for prices to come to break even when they are trapped. Okay, so we must first feel the pain of those who are trapped. Okay, because obviously the markets in a short term are moved by fear and greed. Okay, so we must feel the pain for those who jumped in early, for those who got like who believed like you see they're sending people down, those who believe this move. We must be able to feel the pain. So literally, after they've trapped like this, you can draw a box, guys. Okay, this simplifies things. You can just draw a box. You can make it any box. Just do anything that will help you. Okay, you can draw a box like this. Okay, draw a box like this. So for me, I see that, okay, anybody whose order got fulfilled inside here is literally trapped. When do I know this? You see, this is a, you see, prices are just going down. This is a triangle. This is a triangle. Market structure, market patterns. Okay, this is a pattern. Okay, that's why I say learning is important, and most people are failing because they don't want to learn. If you don't know patterns, then you have a problem. You might not be able to identify trap volume. Okay, because mostly they're going to use patterns to trap volume. Okay, which is why I always say, guys, read books, guys, go and back test, put in the hours. Okay, do your work, do the work on your side. Okay, before saying you don't understand. Okay, so this is a triangle. Okay, we know this is a triangle. So they break up with what? With an engulf. You see, this is an engulf. This is a huge engulfing candle. Okay, this was an engulf all this candle, but they can still come and bounce here and keep going again the very same way they did here. Okay, so we don't enter, we want them to break to the upside. Now they've broken up. You see, once this candle closes here, everybody whose order got fulfilled here is in a very big negative, and they are hoping and praying for prices to go to come back to break even. Remember, hope is a very dangerous thing to be using when you are trading. Okay, hope is very dangerous when you are trading. You don't hope. Okay, if you ever find yourself hoping, just close that trade and move on. Okay, because you don't want to be trapped in an environment whereby now you're relying on hope. That's what they want you to do. Why? Because the moment you rely on hope, now you are actually hesitant closing the position, even though you see that you are wrong. You sold and they are going the opposite direction. Now you are hoping for prices to come back because you used improper risk management. You opened a very big lot size and stuff, and you can see that your losses are too big and you can't afford these losses. Now you are hoping, and when you are hoping, you are giving them more time to do what? To actually punish you more, and now you're gonna be forced to close the trade either by blowing your account, or when you are in a very big loss that you now can't actually take. Okay, so never rely on hope. Okay, hope is dangerous in trading. So now I can feel the pain of everybody who went down here the moment they broke here, and then they explode against this trade. So when you enter this trade, okay, you can enter this trade maybe when there are 2 seconds before the candle closes. Okay, so when you enter this trade, already you can see these guys are trapped, and now you're gonna target what? 50 pips. Okay, and you can put your stops right below this candle. Okay, it's up to you where you put your stop. You can put it right below your candle. Why? Because the thesis is these trades are explosive. As I told you, they are explosive, and chances are you won't see negative. They are not gonna pull back into your entry. They are gonna explode. Why? Because they have trap volume, and now they're gonna punish them. And remember, these are indices, so you target your 50 pips. Let's see. Oh, already it has gone already 70. So your 50 got hit. You see, your 50 pips got hit somewhere around here. That's your 50 pips. And for me, what I'll do most of the time, I will enter and close my chart, come back after an hour. Okay, why? Because I don't want to come and say, no, I want to hold a little bit, and then they go 80 and reverse and come back into your entry. I want to get paid. Okay, so you see, this is roughly 53 if you entered immediately on the close of this candle. Okay, this is 53 pips. Clean, clean, clean in 3 minutes. Yes, of course, they go 196. That's none of your business. Okay, that's none of your business. If you open two trades here, maybe one got paid, and now you know that even if they come for you, you got paid already. Now you can allow them to actually run and run and run. Okay, but for me, it's about the process. I want to get paid each and every day. So this happened on Thursday, as you can see. This happened on Thursday. Okay, this happened on Thursday, and I just want to be in and close my charts. Now we are coming to the next day, which was on Friday. Okay, this was on Thursday. Okay, and this is literally when was this? Wait. Okay, that happened on Wednesday. Okay, this happened on Wednesday. Now we are coming to Thursday. Okay, last week. Now let's start actually looking at our criterias. I'm sorry, I don't want to make this video long, but I want you to understand, okay? And I want those who are willing to learn and willing to improve to be the ones to watch this video. So if it becomes long, sorry guys. Okay, first things first, what did I say? Oh, sorry, I forgot to tick when we identified trap volume. Okay, the first thing is trap volume before the session. Yes, I told you it's gonna be on the levels. It's either the closing price of the previous day, the high of the previous day, or it's gonna be the low. In this case, before the session, they have trapped above, in between the high and the closing price, the same way they did. Okay, wait a minute. Oh yes. It's fine. Yes, it's okay. Okay, this is the same way they did during this day. Okay, I told you I will use this kind of a box. Okay, you see they trapped in between the high and the closing price. Even the following day they are trapping in between. Okay, now the session begins. Okay, now okay, is it 9:30 US time? Yes, so I go to a smaller time frame. Okay, I go to a smaller time frame, and let me just pull that day okay. Now, where did the equity open? As I say, there are days when you won't get the trade, but there are days when you won't get the trade. Okay, so okay, let's look at this day. You see what they did here? I'm not gonna chase this candle. Then they go up immediately, and then they explode. At this point, we don't have trap traders. Okay, now what do they do? Okay, let's expand this. What do they do? As you can see, this doesn't give you a clean kind of setup. Okay, you don't, they are just chopping. So if you were trading on this day, you could see that they are just chopping. They didn't really present with you with an opportunity. Can you identify trap volume on this market? No. Okay, and until you are able to identify trap volume, you don't take a trade. Okay, sorry, you don't take a trade. Okay, you don't take a trade up until you can identify what? Trap volume. Okay, trap volume. And remember, I am on S&P. Okay, and these trades happen every time. Let's go to US30. It was on the 8th. Okay, on S&P we didn't get anything. Okay, let's now go to US30. Let's go to US30. Okay, I want to show you these trades, guys. I want to show you these trades. Okay, on US30, let's go to a 15-minute time frame just so that we can identify trap volume. Okay, these trades happen almost every day. Okay, even if I come here, because okay, we saw that on US 500 S&P they gave an opportunity. Now let's come on this day, but if I do, it's gonna get too long, but it's okay, guys. I believe if you want to learn, you will see these things. Okay, now let's come to this day. Okay, the day. Okay, now we are coming to this day. Okay, we are actually doing what? We are coming to this day. We saw that on the 7th, okay, which was Wednesday last week. They did give an opportunity on S&P 500. Now we are on US 30. Okay, guys, these things happen every day. That's why I can't show you on this on all these indices every day. Okay, so did they trap volume before the session? Yes, I have this color. So we do what? We tick. Oh yes, they've trapped volume. Okay, did is the equity open? Okay, the equity opens on this candle. Of course, now the equity is open. Okay, so I'm on a 1 minute time frame. That's my favorite time frame for this strategy. Okay, and now what do they do? Okay, they just do this. Okay, I'm on a 1 minute time frame. They go up, they come down, they go up, they come down. They give a head and shoulder. But even on a 1 minute time frame, the opportunity was given, but there was a problem. Look at the size of this candle. Okay, many won't be willing to risk roughly more than 25 pips. I told you, for me it's roughly up to 25. Okay, so for many there is a problem. Okay, many are not actually going to be willing, but if you are willing to take a risk of this, because I want this to actually be a low risk trade for everybody, because already I know that people are scared of indices. Okay, so I don't want people to actually expose their capital to high risk. Okay, but you see this candle, it was more than 25 pips. Okay, But if you felt comfortable taking it, this is an engulfing candle. What does it do? It shifts zone. Who's trapped? Everybody going up is literally trapped. Something like a triple top. You see something like a triple top. Okay, everybody going out is literally trapped, and then they give a huge engulfing candle. So if you felt comfortable taking this one, it was good. Let's look. You see 50 pips got hit in roughly 3 minutes. Okay, in roughly 1 2 let's see, yes, in roughly 3 minutes your 50 pips got hit. Okay, so it really doesn't matter in which direction. That's why I told you that we are waiting for evidence. So you see, this was your evidence, and then now they trap people down. Okay, okay, can you see trap volume? Yes, they've trap volume going up, and I told you I don't care if it's a pullback or if I'm trading in line with the trend. But one thing I know is once I identified trap volume at a level, chances are they are not gonna go back to releasing these guys. So that's why I love 50 pips. You see, 50 pips got hit very quick. Okay, and they went over 58 pips, then they reversed. So if you were targeting 100 pips here, sorry, they came back and closed you. Okay, so now they are trapping, and then they give another beautiful engulf. Okay, but on this day I think they were rough. They were really rough, and the candles were too big. Okay, you see, this is 37. I can't expect anybody to take it, but again, they shift the zone. Anybody who went down here is literally trapped, and when this candle closes, people would sold here, maybe people who don't have stop losses, or people who have been maybe trailing their stop losses. You know that people will always trail their stop losses because they are in hope. So everybody who sold here and everybody whose order got fulfilled inside this box is in pain, and they are hoping. Once people are in hope, that's where you should take advantage of them. Okay, so as you can see, I told you these are explosive moves. Yes, they did pull back into your entry, but not that much. They only took 2 candles, and then they exploded up again. Okay, you see, your 50 pips were hit in roughly 14 minutes. I told you most of the time it's going to be hit in less than 15 minutes. So these trades are everywhere, but personally what I do is I don't, if I take one entry and it hits my take profit, I'm closing my screen. Okay, I'm closing my screen, and I might come back after 1 hour, most especially if the trade happened early. But most of the days I'll just close my screen and never come back. Okay, as you can see, that's what happened here. Okay, that's what happened here. Easy trades, engulf that, shift the zone, engulf that, shift the zone. If the engulf doesn't shift the zone, obviously guys, that's not evidence. Evidence shift the zone, and everybody who actually took the wrong direction is now trapped. Everybody who sold here, who bought here, is literally in hope. When this candle closes, they are hoping for prices to retrace so that they can actually exit at break even. Okay, so when you see that, okay, people are now using hope, that's actually your time to actually take advantage of this trade. Okay, and on again, on S&P 500, we didn't get an opportunity on the 8th, which was okay, on the 8th, which was Thursday. We didn't get an opportunity, but now let's come to US 30. Okay, do we have trap volume before the session begins? Oh yes, we do. Where are people trapped? They are trapped in between the high and trap between the closing price. I told you, this is not a coincidence. Okay, this is not a coincidence. It happened on it. It happens every day on Nasdaq, US 30, and S&P 500. Okay, so now is the equity? Did we wait for the equity to open? Of course, yes, we have waited for the equity to open. Now we are marking our checklist. Okay, now can we identify trap traders? Let's wait. Okay, now we have to wait to see trap traders. That's something we will achieve by waiting. Okay, okay, they are sending people down. Oh, this market has broken down. Why? Because they've sent people into trap volume. Okay, this is interesting. Now they've broken down. We know where traders are trapped before the session. Where are they trapped? They are trapped up here. So we are not willing to go back into trap volume. Remember, they've trapped throughout the day. As you can see, they were just playing on this line. And for me, it's the process. I told you, I don't care about the moves that happens before the equity time. I only care about the equity time. This is 9:30 US time. Okay, so prices have broken down. Okay, prices have broken down. They go down, they go down, they go down. We are not chasing moves. Okay, we are not chasing moves. We are not chasing prices. I told you, the criteria says we must see trap traders. Okay, now the market is broken down. You see, they are just sending people back into the trap volume, where They have trapped volume in between the high and between the closing price of the previous day. Now they are just creeping, sending people where? Into trap volume again. Okay, okay, and then what do? They shift the zone within golf. I took this trade and I showed you in the community. Okay, I took this trade and I posted it in the community, and I was happy because there are people say I took this trade as well. Okay, and now if you are using the 20 EMA, as you can see this dotted red lines, this is a 20 EMA. Now prices are closing inside, and I'm not saying use the 20 EMA every time it closes inside you take a trade. One thing I've realized about traders don't want to work. Traders want to earn without working. So when you talk about the EMA, now they are going to wait for prices to hit the EMA. They don't care what is happening. They don't care about the concept. They don't want to interpret the story that prices are telling. I don't know why people want rewards before putting in the work. Okay, guys, it's about putting in the work. Okay, put in the work and then you will reap. Okay, that's why I say go and wait, go and back test. I'm not gonna lie to you and tell you that you can understand this and you're gonna kill it. No, you will only if you put in the work. I told you I backtest over 4 hours each and every day. Okay, so guys, look at this: creeping, boom, they shift the zone. Everybody whose order got fulfilled when they were going up here. Okay, okay, everybody's order got fulfilled above the closing price. Remember, throughout the day they were trapping above the closing price and below the high of the previous day. So everybody's order got fulfilled there is now hoping. You know how it is. If you have ever found yourself hoping, you know how it is. One thing I want is I want to have a stop loss, and for this trade I can put my stops here, or else I can put my stops right above here. Okay, because these are tight stops, and the thesis is these are explosive trades and they're gonna go straight into my take profit. Okay, you see this one took roughly 28 minutes to let's see. Okay, they took to hit my take profit, they took roughly it's 27 minutes. I told you most of the days your profit is going to be hit in less than 15 minutes, but if it goes beyond 30 minutes you can close that trade. This one got hit in 27 minutes, and what I do is I take it, I close my charts, I come back in after an hour, and that is why I maintain my discipline, because I close my charts and come back later. Of course, yes, it went beyond 140 pips. Somebody will say, hey, you are missing a lot. No, I'm missing nothing. Okay, why? Because this is the process I'm following. Okay, and if I'm following, no, wait a minute, I want to show you something. Okay, yes. Oh, okay, yes, it got hit in 27. Okay, so for me I will be out of the charts. Okay, so I'm missing nothing, guys. Honestly, I'm missing nothing. You are missing because you haven't dealt with your trading psychology. Guys, go and deal with your trading psychology. Okay, traders are forcing trading. You can't trade before you deal with your psychology. Why? Because you are going to self-sabotage. And I keep telling you, the problem with traders is not actually making or gaining capital. No, the problem with traders is maintaining those gains, keeping the gains. That's the hardest part. And you'll only keep when you follow a process. Okay, so for me this is a daily process. 50 pips, I'm out. Okay, so I don't care if it goes 100, I don't care if it goes 200, I really don't care. I know indices can go 700 pips a day. These days I don't care. At first, yes, I used to care, but these days I really don't care if they go 700 pips. I want something that's repeatable each and every day. Okay, if it's not happening every day, at least it will happen 4 days a week. Okay, it's the process. Okay, so now let's go to the next day, which was actually, I think it was on a Friday. Let's go to, okay, I think the next day was on a okay, we did this day. Okay, yes, the next day was on a Friday. Okay, so now let's come to this day. Okay, let's see what happened. Okay, throughout the day they trade volume in between here. As you can see, they kept taking traders here, and right before there were news, they explode to the upside. Okay, for us there is nothing. Am I trapped here? No. Why am I not trapped? Because obviously the equity hasn't yet opened. Okay, the equity hasn't yet opened. So if the equity hasn't yet opened, that means I'm not in this trade. Okay, because it's the process. That's why I told you, focus on the process. I don't care what happens during the first hour. Focus on the process. Okay, can I identify trap volume? Yes, they are trapping in between here, and most of the days it's gonna be on these levels. Okay, so I only get interested when the equity opens. Okay, now let's come to our chart when the equity open. Guys, there's still Nasdaq. I won't be able to show you all these things. Okay, I won't be able to show you. That's why I always say go and back test. Okay, once you go and back test, that's when you'll understand everything. Okay, okay, let's look at this day. Let's look. Okay, I'm gonna jump the other days. I'm gonna jump the other days and go straight to yesterday. Okay, okay, so okay, where did the equity open? Okay, the equity opened right here. This is 9:30 US time. Okay, this is 4:30 South African time. This is where the equity opens, and this is the only time I'm willing to be on my charts. Okay, as you can see, what do? They send people up. Okay, they engulf. Is this engulf trapping? No, it's not trapping. Why? Because simply going back up doesn't mean they have trapped volume. Okay, and as you can see, prices continue to drop like crazy. Okay, at this time I am not in the trade. Okay, I am not in the trade at this time. Why? Because prices are just dropping. Can I identify trap volume here? No, I can't. Okay, they come here, they play, but this can't be trapping. Okay, so I'm not on this trade at this time. Okay, I am not on this trade. And then they keep sending people down, they keep sending people down, they keep sending people down. Okay, now they're sending people down. Everybody is going down, down, down. Okay, everybody is going down. Let's see what happens. Now they send people down. Okay, they give an engulf, they try to come back. Remember, this was not just a pin, it was an engulfing candle going down, and people were just selling. Okay, now they go up, they break structure. Okay, let's see, is this trapping? Okay, we'll draw a line like this. Okay, so literally everybody is going down. Okay, I understand. Okay, but at this point I don't know what's happening. They break to the upside and they try to send people down again. Okay, they try to send people down again, and then they break out. They do what? They break out. At this point when they break out, I know now, okay, that everybody going down is trapped. This is a first engulf, but obviously if you're not confident on this one, here's a second engulf. Okay, but I know for many this wasn't a really good example. But again, now they've shifted. As you can see, when they're going down, they are below the EMA. Let me just try to make this EMA a little more visible for everybody to see. Okay, you see, as the prices are going down, they are on the other side of the EMA. And right now, what do? Okay, they send people down. We don't know if this is a trap. Okay, but now, okay, they've broken apart and now they keep sending people down. Then they engulf. Now they are inside the EMA and they give a second engulf. Now we are on the other side of an EMA. Obviously, everybody who kept selling here, who went down here, the moment this candle closes or the moment this candle closes, remember, these are explosive move. Okay, these people are just hoping for prices to come down, to come back down. So I told you, when we can identify the pain of those who are trapped, 90% of people are going to lose anyway. Okay, so when we can identify the pain of the 95% people, that's when we want to start getting in. Okay, yes, it's not a good thing, but it is what it is. We don't move the market, so we have to have an urge. Okay, so now they've broken up. Okay, they've broken up. You see, they've broken up, they've broken structure, but I don't really care about the breaking of structure. Okay, but this is a head and shoulder. Okay, this is a shoulder, this is a head. They come down, they complete a shoulder. Okay, they come down, they do what? They complete a shoulder. Okay, so as you can see, this is a head and shoulder. They've already breaking structure, but I don't care about that. This is an engulfing candle, which does what? Which shift the zones from all this guy. So this is the first engulf that shifts zones, but it wasn't clear. And you know, sometimes if it's not clear, they're going to use a second candle. Okay, and that's where they shift the zones. And when you enter on the close of this candle, guys, your 50 pips was hit roughly, let's see, your 50 pips was hit in roughly 17 minutes. Yes, it was hit in roughly 17 minutes, 18 minutes actually. Okay, this is still less than 30 minutes, and this is a very good trade. They didn't actually go down to give you something like a drawdown. No, immediately you were in profit. The only time they pulled down was here, but you were in profit. They never came close. So when you take this kind of trades, your stop can be very, very tight. Why? Because the thesis is these are explosive trade and they should just go explosively. So you can see the session opened, but there was not much of trapping volume here. Okay, so I'm not really gonna chase these moves. Okay, I'm not really gonna chase these moves. For you to take this one here, you have to understand trapping volume in a very strong way. Okay, because yes, they did send people up and up and up in a broken down market, but they didn't really give the engulfing candle the closest low. But again, this is an engulfing candle, and if your stops are above here, you were safe. But yes, they did try to come back, but you were safe. But again, this was the cleanest one. Okay, but for me, even this one is good because I now understand trap volume and I know how they work because I've put in the hours, guys. But for everybody, this is a clean trapping. Okay, shoulder, head, shoulder. Okay, that's a pattern. I told you, if you don't put in the work, you won't understand what's happening. Okay, but again, this I believe was confusing for some. But again, it's trap volume and then they just go. Okay, so I will say take the cleanest one. For the sake of time, I want to jump this one. Okay, but let me just say something here. This is now an explosive kind of a trend. We did in our previous video explain 3 different kinds of trends: creeping trend, normal trend, and explosive trend. When you see this, this is a trade I don't mind holding beyond 50 pips. Why? Because this is an explosive kind of trade. This is an explosive kind of trade. I won't lie to you. Okay, but for the sake of time, I'm just gonna skip this one. Okay, as you can see, they sent people down into trap volume and then engulfed and shifted zones immediately. Okay, so on a 5-minute time frame, you can see what happened. But I want you to take trades where the trapping is obvious. Okay, so I wouldn't say take trades where they just go down and then they engulf. No, I would say wait for the real trapping to happen. But this way they give you a trend line like this, and immediately they give you another trend line on a higher level. This is an explosive trend. I've shared explosive trends before, and guys, if you understand that, this is a trade I will really be willing to hold for the longest time. But again, this one actually presented an opportunity way too late. Okay, after really trapping. Okay, after trapping, they presented an opportunity late because you can see they broke down and they sent people up, and then boom, a very big engulfing candle. So this is a very beautiful trade. Then they tried to come down, and as I said, I told you about this, but I'm not going into the trade itself. I told you about this. Okay, I told you about this. When you see this slope, it's an explosive slope. Okay, as you can see, they sent traders up, they slope, they engulf. It doesn't matter if this has a pin. Okay, because now they want people to keep buying. Okay, but this is an engulf that shift the zone. It's inside the EMA. Okay, so obviously this one presented an opportunity late, but even for those who understood here that they are sending people up, and then they explode with an engulfing candle. But this had a very uh, bigger risk compared to this one, but it was a very beautiful trade. The problem is now it lasted way too long. Okay, way too long. But this one gave a good opportunity because these days they do move indices late, but this is not the best opportunities. Let me show you a trade I took yesterday. I think I have those trades somewhere here. Okay, because I posted them in the community. Okay, this is a trade I took. You can see the price at which I took it. As you can see, yes, they trapped. They gave a first opportunity here. I didn't take it. They gave a second opportunity here. Okay, and again, this one I didn't take it, but I knew this was an opportunity and this was an opportunity. Okay, but for me, obviously, I was looking at like indices. I was looking at Nasdaq. I was looking at USD, and I was looking at S&P at the same time. Okay, and I told you sometimes they will be correlated. If you look at yesterday, they were highly correlated, and the S&P gave us a confirmation early because they just went explosively without trapping much. Okay, but I took this one because this one was actually the cleanest in terms of trapping. Okay, so this is where I took it. This is these trades are explosive. So even if your stops are a little bit tight, it's okay. These trades are explosive. Most of the time, you're not gonna see a drawdown. Okay, I was supposed to take it here, but again, I was looking at three pairs at the same time. Okay, so yes, they exploded here. I was supposed to take this one, but yes, fortunately they did pull back, and then they exploded again. As you can see, they were just sending traders down, and everybody's order got fulfilled here. Was literally in hope when this candle closed. Okay, that's why even when they pull back, they didn't really come to close these guys here, because they don't want to release these guys at break even. Remember, market makers are greedy, and once they have hold uh orders, and once you are in a negative, they, the only thing they are left with is just to go against you and dig deeper into your account. Okay, and they're going to do that every opportunity they get. Whenever you find yourself in hope, just know that they're going to punish you. If you find yourself, I repeat this, if you find yourself hoping for prices to come to break even, you are in a very dangerous place. Okay, you'll be lucky if they do come and you exit at break even. Okay, that will simply mean that, okay, the money they were looking for was not met. Okay, because sometimes that happen, but most of the time, once they've grabbed your orders and you are in hope, guys, they will force you to exit the trade, because they know that until you exit the trade, then they haven't made much from you. Okay, so that's why they are gonna punish you. That's where the thesis is born from. Okay, we know that once they've trapped, they're gonna punish, because if they just go 15 pips, then if you have a stop loss of 30 pips, yes, you saw negative, but that negative wasn't realized. Okay, so you are still safe if they come and then release you. So they're not going to do that. They're going to punish you. They're going to force you to actually close your trade yourself when you are at losses you can't take. Okay, so if you look at this trade, it just went explosively good. Okay, so this one presented multiples, more than 4 opportunities yesterday. I'm going to show you. Okay, so just look at this opportunity. You see, this engulfs are shifting zones. Everybody went up here and got their orders fulfilled somewhere up here. These people felt the most pain. Okay, why? Because now they're hoping when this candle closes, they're hoping, oh, let prices come back. They are not gonna allow prices to come back. If they are gonna come back, they will first punish you before coming back. That's why we target 50 pips. I don't care if it's a pullback. I don't care if I'm taking it in direction with the underlying trade. Okay, I want to see trap volume. I want to see evidence. I know they're gonna get punished. My take profit is 50 pips. It's reasonable. Okay, it's gonna be hit. That's why you see here they just came and hit my take profit, then started pulling back, even though they continued later, but they went straight to hitting my 50 pips. Why? Because 50 pips is reasonable. Most of the time they're gonna hit it cleanly. You see, this is the candle I entered on. Okay, I entered when there were roughly 2 seconds for it to close, and you see it went back here, and I wasn't really in a drawdown. Okay, I didn't see a drawdown because these are explosive moves. Most of the time you're not gonna see a drawdown. As you can see, what do? They to hit my take profit in roughly 5 minutes, guys. You got paid in 2 minutes. You got paid in 2 minutes. How beautiful can that be? Somebody's waiting for 50 pips somewhere, and they are really struggling with the whole day. You are just coming and taking it so easy. You see, even here, they hit your profit in roughly 2 minutes. Here, yes, they took a little bit longer to hit 50 pips, but they hit it quick. Okay, this is once they give you evidence after trapping, they are gonna punish these guys, and these trades are gonna be explosive. They are not gonna go back into your take profit. But again, trade with proper risk management, because you are not resistant to losses. There are some times when they will have other plans, or maybe the money they were planning to get down here is not enough. They're gonna actually risk releasing everybody. Okay, just to come and hit the stops of those who actually bought here. Okay, so things like that happen. That's why I always say the challenge is keeping your earnings, and always remember that the goal is to keep your earnings, not to win many trades. Because if you enter too many trades and you don't have proper risk management, or maybe you're exposing too much, you're just going to go through circles for the longest time. And I've gone through circles for the longest time. I understand what I'm telling you. Okay, so keeping is the main challenge. Okay, that's what's hurting most traders. So once you master the process, you are in, you are out, then you will realize that, okay, you take 50 pips, you close your charts. You don't wait long enough for another opportunity. If you're gonna wait for another opportunity, come after 1 hour. Because now if you're gonna be entering another trade, that means you are actually risking giving back what you've made. So it's better to close, come back tomorrow with a sober mind. 50 pips is a lot. If you are rinsing and repeating this every single day, even though you take a loss today, you only took one loss. You close your chart after that loss, you come back tomorrow. Okay, so you're not gonna give back. Maybe today you took 50 pips. Okay, tomorrow you risk roughly maybe 12 pips, 15 pips, and then you take a loss. Okay, the following day you take a loss, so you take two losses okay, you took two losses and you have one win. Your win is still bigger than your loss. On the third day you win. You see, you are going forward, you are compounding. Okay, but if you're gonna enter and then you lose this one, okay, okay, say for instance you won this one, you can enter again, you lose it, you become like angry. Okay, I gave back. Now you're gonna trade from an emotional perspective, then you lose. You try to revenge again. You must make it back, you must make it back. Now you are under pressure, and this is self-inflicted pain. Why? Because why did you stay long enough after winning? Take what is yours, get off the screen. That's why I tell you always, if it goes 500 pips, I don't care. Did I lose something? No, I lost nothing. Did I miss? No, I didn't miss anything. I took mine. I will come tomorrow. If I want to come back, I might come back after an hour. Okay, so let me just go to the chart quite quick because I don't want this video getting too long. Okay, let me do this quite quick. I want to show you something. Okay, let me just do this. Okay, let me do this. I think I'm done now. Let me just show you this yesterday trade because I showed you the image of it so that you can get it, but I want to show you what really transpired yesterday. Okay, I told you sometimes these indices are going to be correlated, and correlation is something that changes over time. Okay, correlation changes over time. I want to show you something. Okay, I want to show you something. Okay, okay, let me show you this. This one is S&P 500. Okay, this is S&P 500. We are going to yesterday. Okay, guys, sorry, I just over moved this thing. Okay, but it's okay, it's okay. Let's go to yesterday. Oh, no, where is yesterday? Okay, now let's go to yesterday, the US session. I want to show you something very interesting. Okay, okay, fine. First of all, we identify where volume is trapped. I'm not gonna go into detail about that because you can go and look at your charts, yesterday's charts. Okay, because sometimes people will tell me, hey, do this for us to understand. Guys, you can simply do most of the things. Remember, it's for you to understand, not for me to understand. I already understand what I'm doing. Okay, now it's for you to understand. Okay, and for you to understand, you must put in the work that actually helps you understand. Okay, if you don't put in the work that helps you understand, obviously, guys, honestly, that's on you, it's not on me. I understand this, and the problem I think is some people think just because you are sharing something now you owe them. Sharing with you is because I just want to share what is working. Okay, for me, because I know the struggle I faced when I was starting. I hoped somebody really held me by the hand and showed me how to do all these things, because it would have actually taken less time for me. Okay, so sharing doesn't mean anybody owes you. Okay, so it's up on you. I'm sorry, I'm being harsh right now, but sometimes people need to hear reality. Okay, just because I'm showing you this trade doesn't mean I'm actually owing somebody something, because somebody will say, hey, do this for us to understand. Why can't you go to your charts and do that? Okay, you can see what I've shared with you. You can see the charts. I'm not hiding anything. You can see the charts that I'm sharing with you. Why don't you just go to your charts, give yourself 2 hours, and do what you want me to do? Because already I've showed you the entries and the exits. If you want me to do something, go to your charts, do that. Okay. Now you want me to put extra work. Remember, when I'm putting extra work, I'm the one who's understanding more than you. Okay. And I'm actually for me it's like I already understand, and now you want, for example, okay, let me not go deeper into that. Okay, let me just be patient. It's just that sometimes people need you to be harsh, and I'm really sorry for that. Okay, so let's look at yesterday what happened. Okay, there were news. They okay, they trapped high, okay, and then they were news, they exploded down, okay. And when the session opened, remember, I'm not part of this nonsense. Why? Because I'm not gonna do anything until the session opens. Is the session opened? Yes, that's the only time after ticking I'm saying I'm looking and I'm willing to take an entry whenever it is presented, okay. So guys, I want you to see something right here, okay. I took US30 yesterday, and for a reason. Look at this. They went down, went down, went down, okay. And then what did they do? They said they sent people up. They came here and hit here, okay. I did nothing at this time, okay. What did they do? This was a very good in golf, but obviously, okay, it was a very good head and shoulder. Yes, if you took it and took a loss, it's fine. It happens sometime. This was a very good trade, okay, because it's the process. It's not about the trades that won. No, it's about the trades that were taken following the plan. That's the most important thing. The wins mean nothing. I've said this countless times. Winning means nothing. Losing means nothing. The most important thing is uh following the process. Even if you lose after following the process, it's a very good trade, okay. But look at this. This is what got my interest, okay. Yes, they went up, and now they are sending people down, okay. Sending people down, okay. And I was looking at US30, and I was actually looking at these trades just the same way I'm looking at them now. Remember, I have different time frames. I have the 5 minutes on a different monitor, I have 15 minutes on a different one, and I have a 1 minute on a different one. So I was observing these trades, okay. This one gave a first opportunity, I didn't take it, okay. This one gave another beautiful entry again, I didn't take it, okay. You can see they're trapping traders, they're sending people up, and then immediately they say go up. This is a pin that comes down, and again it goes up. People see this pin, they believe prices are going to go up, they go up. This was an engulfing candle, so they send people up the third time, then they shift zones, okay. Remember, the engulf must shift what? Zones, okay. So again now, what were they doing? This one, you see this one, it just exploded. It exploded. And when this one exploded, here's the funny thing, okay. Here's the funny thing. Here's the funny thing. Let me show you. This one exploded. This one wasn't a good trade for me, because the only engulf we got that shifted the zone is literally this one, okay. I told you it's not about any engulf. This is an engulf, yeah, that everybody here, yes, is trapped. It's a good candle, because everybody going down here is trapped. Everybody whose order got fulfilled in this box, is trapped. But again, as I always say, we are hunters, okay. But take what's easy for you. When I looked at this one, it just exploded, okay. I wasn't comfortable. Why? Because they could have kept going down again. So the only candle that was good for me, that shifted the zone, really was this one, okay. Because now I know that, okay, even on this attempt to go down, everybody's order got fulfilled inside here is literally trapped. Everybody went down here. When this candle closes, they are hoping, okay. So this was the first candle that was good for me. Let me show you something again, okay. I want to show you, okay, let me just click on the EMA. I want to show you this EMA. As you can see, I don't really use the EMA most of these days, okay. As you can see, this is the first candle that's inside the EMA, but already at this time they've already gone many pips, okay. But interestingly enough, here on US30, okay, I told you, when they are trading in the same way, most of the time one is going to be the leading, okay. So when this one closed here, okay, you can also look at the times. This candle happened at okay, 1519, okay, 1519. Let me show you something. Where's 1519? Okay, okay, this is 1519 here. You see, you see this, you see 1519 here. This is 1519. By the time it hit 1519, okay, my broker is behind in 2 hours, so don't worry about that, okay. The equity has already opened, okay. So this is 1519, okay. When it's 1519 here, 1519 is where? 1519 is here. So 1519 on US30 is still inside, okay. It's still part of the trapping move, okay. 1519 is still part of the trapping move. 1519 here has given a confirmation. on this day, these pairs are what? These indices are correlated, okay? So I told you, when they are trading in the same way, one is going to be a leading. So obviously you can see that this one was a leading, okay? By this time, the risk was too big for me. I didn't want to take this one. But interestingly enough, here, they were still trapping. And remember, they're correlated. So they are most likely going to do the same thing, okay? So I just got happy here. Why? Because I knew that this one was leading, this one has already given confirmation, this one was behind, and most of the time it's going to be like this. Sometimes the S&P 500 is going to lead and one of this is going to be behind. You might realize that, oh, on this day Nasdaq is behind, or sometimes the US30 will lead and this one is behind, but most of the time US30 is going to follow these ones, okay? So this was a dead giveaway, and I've already explained this was a dead giveaway, okay? Why? Because 1519 is here, gave a confirmation that prices are going up and they have trapped, okay? And here 1519 is where 1519 is still inside. Is this candle with a pin? It's still inside. There's no evidence, okay? So while my job was just to wait, I told you I should have taken this one, but I was observing these trades at the same time, okay? So I didn't take this one. They pulled back and I took my entry roughly 2 seconds before this candle. So they used the last 1 second to pull back a little. No, I took it my trade here. Okay, my trade got fulfilled here. Okay, and my take profit was 50 pips. Let me calculate that. 50 pips, roughly 50 pips from here was wait, no, wait. Okay, my trade got fulfilled a little bit early, because what I do is I just enter and then I double click on my MT5 and then I just punch 5,000. That 5,000 will just automatically take my take profits to 50. Okay, my take profit was hit in roughly 2 minutes. Okay, yes, my take profit was hit in roughly 2 minutes because okay, wait a minute. Yes, my take profit was hit into, this is the candle that hit my 50 pips, okay? Because I entered on this candle, somewhere on this candle. That's where my entry got fulfilled, and that's where I took my 50 pips, okay? Yes, okay. It's okay, but I took my entry on this candle, okay? I took my entry roughly on this candle. Oh, yes, I took my entry on this candle. Let me go and show you on the image again. As you can see, yes, I took it right here, okay? As you can see, okay, yes, I took it right here, because you can see on the images, okay? You see, I took my entry somewhere here and I just punched in 50 pips. I double click this and then I punch 5,000, then it gives me 50 pips, and this was my 50 pips, okay? This was my 50 pips. So my take profit roughly was 50 pips, okay? So yes, I entered in this candle and my 50 pips got hit very quick, okay? But what gave me more confidence on this one was this leading one. But again, even if this one wasn't leading, I knew these guys were trapped, and this candle is the one that I was supposed to enter on. That means my take profit would have been hit early, okay? But again, it was a very beautiful trade. I could have entered on this trade and put my stops maybe somewhere here, or just up below this candle, okay, below the candle itself, okay? So I knew that most of the time they're not gonna pull back, but yesterday they did. But mostly they're just gonna do what? Mostly they're just gonna explode. So if you took this one, congratulations. If you took this one, wasn't that clear? Okay, so I didn't really stay long enough. Had I stayed long enough, okay, for me, I took it and I was done for the day. That's why I even posted on community that I'm done for the day. Had I stayed long enough, I could have seen shoulder. Yes, if you read Shabaka's book, you realize that there is a head and shoulder which goes like this, which will give you like this two peaks, okay? But again, it's like 1 2 3, it's a triple top, and then they send people up the last time and then they give the evidence. So if you missed this opportunity, there was another presented here and then another one was presented, which is what I took, and again I just took it and went out, okay? And came back late. So this is another trade, okay? And even the EMA is here to help you. They're inside the EMA. They're inside the EMA. They are back inside the EMA. They are back inside the EMA. And obviously, of course, I told you, you must feel the pain of the other person. So at this point, at this time, you know that everybody who took a buy inside here is in pain. And one thing they are doing that we know is they are just praying and hoping for prices to come back. Never find yourself in a place of hope. And if you ever find yourself hoping, that simply means you are not using proper stops. Okay, when you use a proper stop, you don't care and you never hope. Okay, as Peter Brandon says, he doesn't stay long enough to see how wrong he is. If you're wrong, you're wrong. You want to get kicked out of the trade. Okay, that's something which is uh real. If you are wrong, say for instance, you have your stops right here, right above this candle. Okay, these are explosive trades. Okay, thesis is they should not come back, they should just explode. And for your 50 pips, where is 50 pips? For your 50 pips, yeah, your 50 pips got hit in 20 minutes. You see, it's on on their way down, on their first leg down. By the time they pull back, you are no longer in that trade. Okay, your take profit has been healed already. So guys, this is it. And yes, this is how easy it is. Okay, I believe I used different examples. Some examples were not clean, but if you're still starting, don't try to get all these examples that I used. Try to take the cleanest one. This is the cleanest, this is the cleanest, this one is the cleanest. Okay, but it needs somebody who really understands the patterns, because this is a triangle, this is a head and shoulder, but you can just interpret it as a triple top. You see, this is your neckline. Okay, this is your neckline. So you see they are just bouncing on the neckline, support and resistance. Those who believe in support and resistance are just buying. For us, we don't want to rely on support and resistance. Okay, we want to use what we understand. Okay, and if it's not clean, we are not taking it. So guys, you can see this is a trade. If you are scared of taking such a beautiful trade like this, then go and read Mark Douglas, Trading in the Zones. You have a psychological problem. Okay, guys, most of these days you'll hear me talking more about psychological problem, because most people actually think they don't understand. They do understand. The problem is they haven't put in the work, or else they haven't dealt with their psychology. So this is a clean setup that I love. And as you can see, all the trades I've showed you is explosive. It happens day in, day out. Okay, it's just that some days some trades won't be that clean, the setup won't be that clean. But if you're really waiting or looking for cleaner setups, you are gonna find them, guys. You are gonna find them. And when they go too many pips like this, they are actually presenting opportunities for those who are using bigger time frames to take their 50 pips. So for me, I'm taking 50 pips. I don't care if it goes 100. If it goes 100 to 150, then I understand that, okay, it's actually giving opportunities for those who are using a 5-minute time frame, for those who are using a 15-minute time frame, because mostly charts are fractal. So that simply means they gonna behave the same way. Okay, so guys, this is it. And yeah, the video is way too long, but I try to explain too much so that everybody can understand. This is the cleanest setup, guys, and this setup will pay you every day. As you can see, some days there are numerous opportunity, but just take one, get off the screen. Okay, you don't want to come and give back what you have made. Come back the next day with a sober mindset. Okay, but these are the cleanest. I took this one, I was happy, I closed my chart and I was done for the day. Had I came back, I was gonna take this one. Okay, because you can see as they are going up, there is no place where you can say they're trapping, okay, and shifting the zones, except maybe for here. Okay, here you can say yes, they did trap. They sent people down. Okay, they sent people down, as you can see. Okay, they sent people down, they broke up, came and tried to send them down, and this was the engulf that shifted the zone. But anyway, guys, it's all about understanding trap volume. Okay, you are always gonna get an opportunity on this one, but it's about trap volume. As you saw in one of the examples, that where they didn't give the opportunity, sometimes it won't be there, they'll just be choppy, and take what you're taking. Okay, you are not losing something. Okay, you are not losing anything, you are getting paid, you are following your process. Okay, of course, as I said, learning is important, guys. Go, please go and put this into practice, go and back test it, put in the work, because people don't want to put in the work. Okay, people just want to benefit. This is the hardest industry. Okay, pilots fail in this industry, doctors fail in this industry, the most smartest people in the world, they fail when it comes to this industry. Why? Because this is not an industry that requires somebody who is quick to understand. Somebody will say, but now I have a high IQ, I understand things easily. No, this industry doesn't care about your IQ. This industry cares about your discipline. This industry cares about the process. Do you have a process? How true are you to your process? How disciplined are you in terms of following your process? Okay, how often do you breach your process? If you breach your process, you can't account for that. You can't become better. You can't journal. Okay, so it's all about the process. It's all about discipline. It's all about psychology. Okay, and psychology holds over 70%, as I always say. People are forcing trading. People come 30% prepared, uh, like 30% prepared, and they are 70% not prepared. And remember, you must be prepared. Go and deal with your psychology, guys. Please, please, please. Until you deal with psychology, you will find it hard to become profitable. Winning a trade is nothing. Mike Douglas says winning a trade doesn't even require you to be a genius. It doesn't even require you to know. Somebody could have came and saw this in Gulf and sold, okay? Because I told you in my recent video, you are a hunter. If you are hunting elephants and maybe the elephant is delaying, now you have 10 bullets, you are shooting birds. You hit 10 birds with those 2 bullets, with those 10 bullets. When the elephant passes, guys, an elephant cannot hide. It's too big. You're going to see that this is an elephant. An elephant can't run. It's too slow, okay, because it's too big. You are going to be left with regrets. Even the best trade is going to be visible just like an elephant. But if you don't stay long enough, if you don't stay disciplined enough, you are going to deplete your resources trying to catch this, trade the first hour, do this. No, don't deplete. The elephant is not gonna, it's not gonna be invisible. It can't hide. You can see an elephant. If an elephant passes right in front of you, you can't say I didn't see it. It's too big. If maybe your eyes were closed, you will hear the footsteps. The same applies to the right opportunity. It's gonna be so visible, just like an elephant. Okay, you will see it and you will know that this is the opportunity. But if you are not prepared psychologically, if you are not prepared, you will might feel scared. Oh, I'm scared. If you jump the gun before the trade actually happens, you are gonna feel like, oh, no, 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 this and this and that. Okay, so go and prepare yourself with trading psychology. There are more than 3 books I've recommended. Even on here on YouTube, you can just type trading in the zones. There are channels which provide audiobooks. You can go to Scribd, you will find an audiobook of Mark Douglas. Okay, you can go to Amazon, you will get an audiobook of Mark Douglas. Okay, you can just anyway, guys, get Mark Douglas trading in the zones. If it doesn't matter if you read it or listen to it, it's gonna help you. Mark Douglas again has another book called Trading, the Disciplined Trader. It will help you. Uh, there is Trading Psychology for Dummies. It will help you. There are millions of books that really focus on trading psychology. There are thousands of channels even here that you can look on trading psychology. Because guys, I'm trying my best to share with you, but until you put in the work, okay, and you actually deal with your psychology, you're not gonna keep your earnings. Okay, the reason I took this one and closed my chart is because yesterday I got paid. The day before yesterday, it was a profitable day for me. So I have a number of profitable days that I haven't actually messed with. Okay, why? Because I get off the screen and I do something else. I can read a book, I can watch a movie, I can do whatever I want. Okay, but close your charts, get paid. Don't try to stay long enough in the charts and then try to I'm gonna take this one. Hey, no, 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 no. Don't give back what you made. Keep your earnings. That's the most hardest part for every trader. Keeping their earnings. Okay, you will never find consistency without keeping your earnings. That's why in my recent video I even tried to explain that if you see that you are too emotional, try to trade long term, because when you are trading long term, you are taking less trade. Guys, keep your earnings. That's the most important thing. Find a way to keep your earnings. Okay, I'm not being harsh, I'm sorry, but I've learned these things the hard way, and I'm really trying my best. Okay, I'm trying my best to assist here, but yes, I know some are going to complain that the video is too long, I talk too much. Okay, it's okay, but I believe what I'm saying is my experience, and I'm really trying to help where I can possibly. Okay, so take less trades, get paid. You don't have crazy targets if you're a short-term trader. targeting 200 pips. You are gonna get it sometimes. Maybe yesterday you could have got it, but what about today? Are they gonna go beyond 200 pips? If they do, what about tomorrow? Is that something repeatable? Is that something you can rely on? If not, then follow the process. For me, the process is easy. 50 pips. I've had people telling me that I'm leaving a lot on the table. Hey, what's your risk reward? Mostly my risk reward is 1:5. Okay, but I don't care, guys. I'm not leaving anything on the table. It's a mindset. I follow my process. Okay, I don't care. You think you are missing? For me, it's not about that. For me, it's the quality, not quantity. I take 50 pips, I'm in, I'm good. Guys, I believe I've talked too much, and guys, I really appreciate you. And as already stated in yesterday's video, I'm doing lives one-on-one for those who are struggling, and I really mean those who are struggling, okay? Because I'm gonna ask you different difficult questions, and if you don't answer them, I'm not gonna help you on those one-on-one. Why? Because guys, it's my time now, okay? I told you I backtest over 4 hours each and every day, and I am also studying long-term economics, so I need time for myself, okay? I need a lot of time for myself. Besides, I need time away from apart from trading as okay. I'm human, I need my time, okay? So please, 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 only send me an email if you need a one-on-one. It's gonna be free, but you have to be struggling. And struggling, I mean you have to maybe have put in a lot of hours into backtesting. If you tell me you've been backtesting this for the past 5 days, you haven't done anything, okay? You won't understand things on your first 5 days, okay? If you are following 10 strategies, you are not struggling, you are just not prioritizing, okay? If you haven't backtested many hours, obviously you are not putting in the work, you are not struggling, you are just not putting in the work, you are not willing, okay? Many people want to win, but they're not willing, okay? And again, you must have worked with your psychology, because there are people who think they are struggling, but in reality they are not struggling. They are not prepared psychologically, they are not ready, okay? So you must be ready psychologically, okay? You must have worked on your psychology, maybe read one book, because I might ask you uh about psychology. What have you learned about psychology? I'm gonna make it difficult, okay? Why? Because I'm gonna try. I know everybody will want to be part of that one-on-one, but guys, if you understand the setups, please don't be part of it, okay? I want to help those who are really really struggling, okay? It's gonna be free. And again, uh one thing that makes me like explain the strategy too much is the fact that most people are getting it, and I believe they're getting it simply because they don't have a directional bias, okay? And it's good to have a directional bias, because you're not gambling, you're coming on the day, you know what you're looking for, okay? If it's not there, you're not taking. But people are now forcing trades. That's a psychological problem, okay, that you have to work on. It's not a trading problem, it's a psychological problem, okay? So when I say struggling, I mean people who say, I've invested a lot of hours into this, I still am really really struggling. I'm gonna help you on a one-on-one. And as you already know, we have our playbook meetings, question and answers, and I've just moved them to Saturdays, because I realized that on Mondays people are at work. Some have just knocked off from work, and they really find it a little bit difficult to make time for those meetings because they're tired. If you're tired, obviously, of course, your mind is not in the right state, and you might not uh, benefit from the meeting. So I move them from to Saturdays. I'll tell you the time, okay? So guys, I really appreciate you, and this has been a long video. And remember, for me to make long videos, guys, it's also like it's also a lot of work from my side. And yeah, I get exhausted making these videos, but I'm only making this kind of videos because I'm trying to help, okay? So always feel free to comment, to like, to share. And if you are new, you can hit the subscription button. I'm just helping you. And please don't tell me, do this for us to understand, okay? Because that tells me that you know what is required for you to understand. You're just not doing it, okay? So go and do it when you're back testing, okay? And then you'll understand better, okay? So guys, I love you all and I appreciate you. Today it's Wednesday. We're gonna get some good opportunities. uh just be available, okay? and follow the steps I've told you, you'll see everything will fall into place. Guys, I really appreciate you. Thank you.